following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a great weekend. And man, how about the election stuff going on now? Man, God, can it get any crazier? And I see that the Halloween pre-market sales, I think the number's around 8 billion. They've calculated now, people that are going out and buying their clown suits. And that's just at an all-time high of spending money before Halloween. This is a wacky, wacky week starting up here, folks. Get ready for it. The thing that's not that wacky, though, is the dollar situation. Talked about the big support areas, 98.19, 98.20. This is our daily chart on the dollar I'm showing it in, and we reached a low of 98.22. So got down into that area. We've kind of bounced off of it. I always talk about these long-term inflection points. Lovely. You can go into the scanner and see what's going on here with the dollar, always. And there's those inflection points. There's the 98.20 I was talking about. So, you know, taking a break from the intraday noise sometimes is just not a bad thing. You're going to get those higher probability setups that happen as we talk through some of these usual suspects on the dailies and the weeklies a lot of times, and you can look at those areas to try to pick battles. One of the things I want to pull up here also in that same spirit is when we took a look at the euro, and I'm going to pull that up really quick. It's the dollar on my other screen here. So when we look at the euro, this is the long term on the euro. You guys are aware of this. We've talked about this 109 general neighborhood being a big deal. And that was a target-rich environment on there. And we also talked about trying to block the long trade out. That's the lower probability trade. And we also talked about trying to trade against this 109.34 area. Well, this is an example of it, you know, being a little bit of a border there for a while. But then we've got to take our medicine sometimes. So now, in my opinion, the trade on the euro is still blocking out the long side. Even though we've had a pretty decent move here, not super decent, but is to just kind of wait and see. You know, it's a stop out trade. You know where the borders are, and we just don't have any leverage right now. So, you know, pointing out one that works out very well, the dollar, and the one that seemingly clipped us a little bit there if you're taking that attitude. Let's hit the pound. Did you guys catch? Really cool guy, seemingly a really cool guy. Anthony Bordeaux on the CNN. He does that little. I think he was a Michelin chef, actually. Kind of grew up in Jersey. Kind of a cool guy to listen to. Got a lot of experiences. He was in Great Britain, or UK actually, doing a show recently. Food related, of course. And let me get my chart together here. Okay, here we go. Here's the pound. And it was interesting to listen to the kind of the chatter going on about, you know, the Brexit situation, what's going to happen. If you can catch that one, it's actually a pretty good show. Getting to the heart of the matter with the citizens over there. So here's this really thin profile. We talked about waiting to get on the British pound, waiting to get a daily close outside of this range, 121.58 down below 122.83. That's just not happened yet. We don't have a daily close there. Kind of migrated below there on Friday and then kind of closed back into the very compressed on a relative scale profile of the British pound. And if you go into the scanner, again, you're going to see these numbers going to the Forex section. And there it is. So there's those 121.58, and there's a 122.83. So again, you got some pretty good information in here, gazing across quite a few instruments. And as we look at this, taking a look at while we're in this currency area, we're going to take a look at the Japanese yen. This has, again, been one of my favorite trades to pay attention to lately. Really, really looking attractive here. Some new news out on the Japanese economy. Everybody's watching that. Going to have some gyrations here, folks. But again, trying to block out one side of the marketplace, just like on the dollar, blocking out the short side and only buying support or buying breakouts. It's a similar situation now with the yen, considering that technical damage that started happening about 3 or 4 weeks ago. So, what do you do with the yen now? You try to use, if you can, if you're not in that long term, just kind of hang on for a while and use some of the longer term inflection points as a stop mechanism. The 240s, again, we're kind of climbing up again. We used 104.40 recently, and now we've got 104.89, a new 240 profile edging higher. That's your new short-term support on the yen, 104.88. Let's take a look at the Chinese currency here. Joey and I have been talking about this one. Gotten up into this, 678 profile appearing below price action here on the daily, very bullish setup. Excuse me. Here's the 240s getting below these profiles a little bit. So on the short-term trade, you got to kind of sit tight here and wait for the yuan to get back above 677. But again, still like this trade to move north, as Joey and I have been talking about. Canadian dollar, hadn't talked about this one in a while, but we're going to hit this really quick. So here's the weekly on the Canadian dollar, 133.107. This was something that you could play a little defense against for some range-bound trades. But again, we had kind of a close above that 2 weeks ago, and we're consolidating above this 133.107. We're also getting a new profile appearing on the daily, so might want to sit tight on the Canadian dollar, even though we have broke out above the weekly profiles, and just kind of sit tight on this one. I still think the dollar is going to move north, which would have some bearing on this, but you've also got to pay attention to oil, of course, when you're looking at trading the Canadian dollar. Let's go into that market right now. Excuse me. Let's look at December oil. We've been talking about, trading this from the short side. You kind of got below that 49.52 last week, closed pretty well below it. Top of the mountain on the weekly POC. We're going to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Let's take a look at Goldman Sachs here really quick. I guess they're upset that they were sidelined on the deal, advising on the deal. Where's that at? I lost it. I guess they're trying to get in the middle of now advising Apple to take a look at Time Warner. They're upset. They couldn't wring zillions of dollars out of advising. Taking a look at Goldman Sachs in general, though, here's the 240s. This is one, again, just going to the simplicity of it, trading above profiles above 170 is kind of, not an attractive short situation until we get some indications on the weekly or the daily. Nothing up here. Just wanted to point that out. CMG, let's take a look at Chipotle. All right, so here we go. 392, 393, we talked about getting down below here, watching out for that whoosh sound that could happen once we start getting some momentum below there. And is this a buying opportunity yet? I just don't see it. This is not the type of action you want to see when something falls out of bed this hard and just kind of spins around down here. Basically on the same area that it closed at after the big sell-off. This is, ouch. This stock could easily get into the 200s, by the way. I mean, just, it can happen. So, not on sale. Disney. All right, so, is that a real print? That might be a real print. Yep, 93 and a half. So here's the situation on Disney, long-term 92 sitting there. I was really hoping this thing would kind of use that to play defense against on the short side, but we popped our head back up into the fair auction. So what do you do with Disney now? Here's the daily, that weekly sitting there, 92. I would just really like to see this get below 93.46. Try some shorts there, play defense above, get to 92 and even farther south. I'm just, the broad market in general, I'm going back to our scanner right now and looking at our market breadth statistics relative to profiles. And remember, folks, what these do is they calculate the amount of stocks trading above, below, within profiles on different time frames, as you can see here. And with the election situation happening, the new news that Comey came out with, and now the Democrats are, Republicans were mad before, now the Democrats are mad. But I don't know how you got to make decisions on your candidate based on available information. And I'm assuming now the Democrats are upset equally as the Republicans were before on, hey, you can't release information like that before the election. But man, this is pertinent information, I would think, for somebody to make a decision. So, going back to the markets, which is what we should focus on this show. I don't see a lot of, delightful things going on with the broad U.S. stock market. So going back to the Disneys of the world and really anything else that's not just this beacon of light on the long side, the S&P is still, in my opinion, 2134 still, in my opinion, is just going to be, and we've already reached this morning, 2131. Still a chance to lever shorts. The market seemingly has got some kind of correlation with, Hillary possibly being president and, market going down, obviously, if Trump starts creeping up there. So, God, this is a tenuous time. I don't see people taking a lot of big positions right now on the long side, and maybe we're leaning towards the short side right now. Southwest Energy, talked about this one, kind of broke down below 1211. This is obviously within the scanner. Also, you got some support down here on SWN. Talked about that would be really a decent area to get long again, is getting back above there. And here's our daily situation. So we've gotten into the bottom of the profiles on our daily on SWN. Those bottom numbers are 1035. We talked about oil continuing to kind of come off a little bit here, and talked about that last week, actually, when it comes to this stock. We don't have any prints going on this morning. Still, still not really a big fan of buying anything related to oil right now. So had a question about that last week. I still think, you've got a trading bounce opportunity around 1035, but that's the scarier trade. All right, let's take a look also at some of the stocks that came out with earnings last week. Let's take a look at Coca-Cola. All right, so here we go. So Coke, looks like we're printing about 42.38 right now. So here's our weekly numbers on Coca-Cola. Not a huge fan of buying this inflection point, 42.10, and playing defense below, just because I think that the tone of the market right now, the broad market, is a little skittish. And, Coke is on, even with the announcements that they had last week, still a relatively weak stock. So trying to stay away from that. I'm even trying to nibble down there. Let's take a look at Amazon. All right, so 781, let's just call it this morning, it looks like. All right, so the 761 area we talked about, we're kind of down in the middle of a fair auction on the weekly. That's going to be the kind of let the market come to you situation on Amazon. I just think you're kind of flailing around down here without coming into those longer term inflection points. And here's a daily, and again, we're trading about 770, 780 this morning, so up a little bit. The short-term numbers on Amazon, again, within the scanner, 761, 762, 761 is that big number on the weekly, 762 the 240. So I really don't think you have zero leverage trying to trade this in this area right now. It's a crapshoot, and sometimes you got to sit tight. Let's take a look at Ford. All right, so in my opinion, Ford is going to easily get back down to 1135 and possibly a little lower. It's been an underperforming stock and didn't have the greatest announcements last week. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Excuse me. We're going to take a look at Tesla here. I just want to show you something. All right, come on. Let's get our quotes going here. Here we go. All right, so this is our weekly, just really not showing any signs of life there on the long side. And what I wanted to show you was Thursday, we kind of had that news, and then we said, probably should be selling into anything, any type of Tesla bounces here. So 214.06 was that daily unfair high, and this little puppy explored the entire fair auction, reached a high of 213.70. So volatile stock got within 35 cents of that border up there. We always talk about don't try to trade these to the tick when you got a volatile situation, but gave you a great place to play defense on the short side there. And then Friday we actually closed below our daily profile. So this is not good for this stock. And been a big fan of just kind of laying off the longs on this one. But now looks like pre-market, trading about 200. So I think Elon Musk is talking about now an entire roof to replace your current roof. That'll be the life of your house type of roof with solar cities type situation. I mean, I just think these guys are getting behind as far as time to make money. Let's take a look at Twitter. Guy's full of ideas. Twitter, let's just see where we're at this morning. If this is a real print. Yeah, 1781. So I don't see a lot of positive things going on with this company too. I mean, obviously there's news-related stories that can, cause those type of actions. But if you're looking at this, and it's probably a smarter thing to trade this intraday at this point because anything can happen overnight, and this thing could be at 30 based on somebody trying to take a shot at monetizing this thing. We try to use 1718 a little bit as support last week. I mean, a profile's edging higher, but this thing's not really wanting to get away from these unfair lows, and I think we could get any type of closes on a daily basis below 1718. I think you could easily race for 15 just to do it. So keep that in mind when it comes to let's get a stake in the ground on Twitter and then try to block out the long side still on that particular stock. All right. So January beans. Here we are. 1049, 1050 on this particular month product. That's going to be your kind of resistance area on this. We're just right in the middle of a fair auction here. Here's the numbers on beans down below, 984, 985. That's the big number there. And 1025. So those are the three big numbers on November beans. I'm a little more bearish. Excuse me, January 17 beans. Did I say 07? Those are the big numbers, and I'm more partial towards the short side on this particular product. We talked about the S&Ps here. We're going to talk a little bit about BHI. All right, so General Electric, the story here if you read the news, 6381. We're just going to talk about the technicals. So 6381 looks like we're printing pre-market. Here's the weekly. 5238 just was a launching pad last week. So what do we do moving forward here? Here's the daily. Nothing to hang on to there, and we're up even farther from that daily print, 5912. So here's the 240s. I don't even think you play around with this at all. You just got to get some more sanity to this particular product now on dailies or weeklies. And they are putting up like starting to complain about it around here, putting all these solar farms up like a waste of, there's killer farmland around here, and they're just, it's nuts how some of these people are leasing their land out. Let's take a look at Big Mo. All right, so 65.38 was something I was really hoping to trade some shorts against, but we had a weekly close above that number, and that just kind of said all bets are off right now. So the next chance here is 66.83, or just getting at least a daily close below 65.38 on Big Mo. Couple other stocks. COP, ConocoPhillips. All right, so it looks like 44.60. I think that's a real print this morning. So about where we closed on Friday. So all we've done really here is get up into the 44.89. And it looks like we're trading a little bit below there, 44.60 right now. So I think you got kind of a short-term range opportunity situation here to trade that back down into 43.17, but not a big fan of the oil sector right now, so might be a relatively safe situation. Let's take a look at UPS. $107.70. Looks like we're no prints this morning. Here's the situation on UPS. 103.46 is support on it. I just had an email about this. I don't think you can really step in and get any leverage on this one. UTX. 103.52, in my opinion, would be hopefully you could get back up into that area and start shorting this particular product. Let's take a look at what month on bean oil. Somebody asked about that. P, maybe you can throw that out there. Let's hit gold while we're waiting on that. Got above our area 1278.5 last week, but we're kind of relaxing back down into that. Fair auction started out, rattled around there, heading south this morning. I actually got stopped out of that trade last week on Friday, but on the short side. But again, taking a look at gold and, the understanding the climate out there right now. We're going to talk about this a little bit more when we come back, folks, from break. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Finishing up about gold, you'd think that this thing would have a little bit more volatility to it right now than it's showing. But 1278.5 still a big number. Poked our head above Friday and closed back within that, and then kind of retested this morning. So kind of amazing, actually. And the bad news is for longs is we've got a profile appearing above price action on the long-term weekly. So it's kind of a bad situation and may revisit 1252 and a lot lower. Joey was talking about this at, getting back down below 1252 and really getting some legs to it, revisiting some much lower numbers, 1200 an ounce, things of that nature. And I'm kind of with him on that. Let's take a look at Alibaba. This is one on the daily, right in the middle of profile on the weekly, but the daily kind of edged down into 101.44 last week. And I think you got a little bit of chance for a trade and bounce here. Trading up a little bit, 102.25 this morning. Let's take a look at General Electric. Everybody's happy. Here we are, 29.60. So, I think you got to sit tight on this one. I mean, this is not a rosy situation. I tried to pick a battle around 29.55 on General Electric, and then when it started consolidating here, I just decided to pass on it. I think the market's just going to drag down quite a bit. I know that, they're in the news this morning, but you got 29.55, 29.33. You're trading about 29.60. I think we're just going to possibly gradually relax back down below those numbers, and then I think you got a short opportunity again. All right, let's hit Facebook. I refuse to use this thing. All righty. I'm probably stupid for taking that attitude. Looks like we're trading about 132 this morning. So the Teflon coated stock called Facebook, 130.14 still support on it. And as we look at this, how do you just don't short this stock? We've talked about that with Amazon, but we also talked about getting away from that particular stock before earnings or any type of news announcements. I still think that's a great attitude to take. And Facebook's just the monster of monsters here. So let's take a look at Microsoft. Blocking out the short side. Microsoft, and Joey and I talked about a couple of times that, this stock is a catch the bid situation for sure. Here's our dailies, and we talked about, support on this, 59.49. That was hit on Friday and bounced right off of there. So let's just see where we're trading this morning, 60.12. So getting back up even a little bit more so. This is a stock you don't want to be shorting also. Nice little chance to catch a bid there on Microsoft around those daily unfair lows, 59.49, that general neighborhood. All righty. Let's take a look at Dow Chemical. These are all stocks that came out with some news, and then we're just trying to reflect and figure out how to move forward with some of these. Okay, so looks like, is that a real print? 54.18. So you've got support around 53.03 on a long-term weekly, up into 53.68. So still a decent opportunity on the long side on Dow Chemical. Let's take a look at LinkedIn. All right, so closed 189.50. And here's LinkedIn. All right, so here's your weekly, and you're going to have a new weekly set of numbers come out today or this morning on LinkedIn. So if you're looking to trade LinkedIn's relatively high price stock, might want to wait patiently until those new weekly numbers come out and see where they are. I'm sorry, our daily. Sorry about that. That's our daily. So we're going to have a new daily profile coming out this morning. Okay. We're going to hit some banking stocks right now. Morgan Stanley. Talked about staying away from this one on the short side. This was kind of the strong of this sector. Still is. Trading about 33.52 right. And let's see, pre-market 33.51. So about where it closed. Is this a trading opportunity on the long side right now? You know, I think you got to pass on a lot of long opportunities right now, unless there's something like the Facebooks, which don't have a lot of market relevance. But some of these banking stocks, I'd stay away from that one on the short side, but it's a pass on the long side right now. JP Morgan, you know my feelings on these guys. Again, the strong of the strong, 67.77 support there. Let's take a look at Wells Fargo. Highly regarded stock in my mind. Trading 46.29 this morning. 46.53. We talked about waiting patiently until we got up into a place we could play defense. Well, we're there. We hit that on, was that Friday? Thursday and backed off. Nice little thing to see. Easily can revisit 44.29 and lower. I know that's not a lot of bang for your buck when if you're trading the Amazons and the Teslas of the world, but boring is good in trading, and being able to play defense and just kind of not have to watch something, set your OSO orders in, OCO orders in, and just kind of let it happen. I think we're at that stage on Wells Fargo again, and in a stock that has had the technical and fundamental sentiments that I've had on it. It's nice to see something come to you. That's your takeoff point, 44.29. We've talked about this a lot. You got to be willing to take profits at some point, and then it's on your radar screen from the short side only, and being able to play a stock in that manner. Let's take a look at Bank of America really quick also. $16.24 support on it. Again, kind of outperforming the rest of the sector. Retracements could come back into 16 on this, but again, I think you got better things to devote mental capital to on the short side. Let's take a look at the XLE sector as an ETF. So coming down into that last week, former weekly unfair high 69.03. I think 67.31 is probably in order here, and I think crude could come off more so. Healthcare sector, no mystery here. Been the weak sector as far as the market's relative weakness. We're going to talk about this a little more when we come back, folks, and look at some stocks within that sector.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Johnson & Johnson, that healthcare sector, it's something was wrong with this. We talked about that, breaking stride, technical damage, blah, blah, blah. And then being able to play defense above 120.75 as we kind of started getting back into the weekly. This is our weekly numbers. Had a new breakdown in this. I wasn't sad about that. And then we talk about, how do you trade this, especially after you get that yellow peel back happening in the scanner there. You're looking for new areas to play defense on the short side, 116.33. We hit that Thursday. We backed off. What do you do with it now? I still think you can come down to 113.55 on Johnson & Johnson. Let's take a look at Apple. All right. Hallelujah. All right, so 114.82, weekly close below that area. Looks like we are printing 113.79 this morning. So here's the 115.66, and now we've had that weekly close below that 114 and some change, 114.82. So now it looks like you can sell rallies up into 114.82. Really like that action last week on Apple. Finally. Now we can look at it a little bit more from the short side. Home Depot. Talked about this one, just again, something wrong with this one also, and closed ugly last week. Pretty far below profiles here on the daily. So again, you had quite a few ways to play defense against the shorts with the short side. Looks like pre-market we're trading down 122.60. That's where we're at on Home Depot. All right, just to wrap up here. S&Ps, if you're joining us late, still love that 2134 area to play defense on the short side. I think the fundamental news out there is just not going to allow this thing to do any type of rally. So you got to be selling those rallies if you're offered those rallies. And this morning you're trading up a little bit. Be nice to get up into 2134. Lay some shorts out there. Oil, I think we're still going to just continue to sell off here into that 46, long-term 46, what was it, 46.20. Let me give you that number, 46.23. Gold, I think we could easily get down to 12.52 again. 10-year. Interesting little situation. Rally back up into that unfair low around 129.22. But I'm kind of leaving the notes alone right now. The dollar had a nice trade on Friday, kind of getting into that, the back up the truck kind of number 98.20. I think we reached 98.22 and rallying back off of there. So this is still long and strong on the U.S. dollar. And let's take a look overseas really quick. We have about 10 seconds left. Shanghai. Joey's was indicating we were going to be stuck in the mud on this one for a while, but I'm still biased towards being long the China A shares. Guys, thanks for joining us. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.